Hello there everyone, today's video is all about changes afoot to the student loan repayment scheme. Student loans came in about 30 years ago. In fact, I was at university when they came in. Now luckily in those days, in the early 90s, the level of debt that you could get into was capped. I remember the first year of student loan was about 400 quid. I think the next year it was about 450. So coming out with 2 years of debt at that level was not a problem. Obviously, fast forward 3 decades and now students have to pay for their own tuition fees, which we didn't have 30 odd years ago. So kids are coming out with huge amounts of debt. There is a real systemic problem with student debt and the repayments. So the government have just announced measures, the Department of Education, to tackle that, to make changes, all with a view of them recouping more money. Ultimately, how do they do that? How do they go about doing it? So let's have a look and see some of these figures. So first of all, I never knew this until I read this just yesterday. They reckon only a quarter of students who are about to start full-time education now, or in it right now, a quarter of them will repay their student loan. That's it. 3/4 will never repay the loan in full. So that's a big amount of money that's owed to the government, which never gets paid back. In fact, right now there's about 160 billion pounds of student loan outstanding. So 160 billion, and they reckon by 2043, which is only in 20 years' time, that would have climbed to 500 billion pounds. Can you imagine? £500 billion worth of student debt which is outstanding and needs to be paid back. I mean, that's just an insane amount. The total tax take in the UK every year is about 900 billion. So 500 billion outstanding student loans. It's a big figure. So what changes are afoot? Well, the government have announced several changes to the student loan regime. First one being a cap on tuition fees. So tuition fees will be capped at 9,250 for the next few years. So that's a good thing. If you're a student, you know that you've got certainty that will be capped at that figure. However, whilst the student loan itself will not go up for a while, the point at which you have to start paying it back is sooner after you graduate than it has been. So because you will start paying back your student loan once you hit earnings levels of £25,000 a year. So as soon as you start earning 25 grand a year salary, that's when you start paying back your student loan. Currently, just over 27 grand. 27,000 is when you have to start paying back the student loan now. That will drop to 25,000. Okay, what's the next one? Oh yeah, the interest rate. So the interest rate will come down. So the interest rate on student loan debt at the moment is pegged to RPI, and it's actually 3% above RPI. So retail price index, measure inflation, plus 3%. That is the current interest rate on repaying student loans. That will come right down to just be equal to the RPI, whatever the RPI is. So not the plus 3% on top. So the interest comes down. Lastly, the term of the loans is extended from 30 to 40 years. So after 30 years, they're not going to write off the debt and say, forget it, don't worry about it. That will drift out to 40 years. So they'll expect payments back 40 years. And can you imagine that means that a lot of students will finish paying off their student loans just before they retire, like in a few years before. But you know, the government's obviously crunched the numbers on this. They've got their tax guys to say, look, how can we get more money? We're writing off too much. You know, we're saying 3/4 never pay this back. How can we get more money in? Well, let's do this combination of factors by lowering the interest rate, extending the payment term, and accelerate the point at which they start paying it back. So these are all measures announced just in the last couple of days by the government. And one more thing, they're looking to strip out poor quality courses. They reckon there's a lot of dross kicking around at the universities in terms of the type of courses. I'm not going to name any type of courses for wanting to offend anyone, but there are a whole myriad of courses, which statistically, when you look at how graduates perform in the job market post-graduating, the ones who do worse compared to the ones that do better have tended to be on some of these Mickey Mouse courses. Now, the courses, you can get a course for anything now at university. 30 years ago, it was still quite a good variety, but now you can literally get courses for all sorts of stuff. And the government reckon that's not such a good thing, because a lot of these are not really helping students much. They're coming out with a qualification that is pretty meaningless, and employers don't give two hoots about it, and so they can. And this is one of the reasons why you've got the problem, because these students are getting all this debt and they're not getting elevated to get these jobs. Then to be able to afford to pay the student loan back, they're not making enough money. So stripping out poor quality courses, that's also on the agenda. So just an overview there on the changes afoot to the student loan regime. If you like this video, please do remember to subscribe, and as always, I'll see you soon.